Investors appear to be less enthusiastic after markets hit records earlier this month. North American markets trending lower, as you saw today. And if that holds, it will be the first 3 straight days of drops since March. Let's find out what it means for your portfolio. Ann Bartels joins us, Chief Investment Strategist, Sanctuary Wealth. Thanks for joining us today.
Thank you.
So we've seen markets on a bit of a run lately. Is there more room, you think, to run?
I think by the end of the year, we could be at 7,000. So I definitely think that we can have significant more upside. But the markets are, in terms of the equity markets, are extremely overbought. Rates are extremely oversold. So I think we're going to get this tactical correction in equities as we see a temporary tick up in interest rates. Today, we got some really strong economic data that was not expected. And that's really what has rates moving today.
Yeah, you're talking about the U.S. GDP number. It did come in a lot stronger than expected, so things seem to be humming along there. And you put your S&P 500 target at 7,000. You're talking about a correction being then a short period of one.
That's correct. You know, everybody's talking about September and how it's the worst month. And I think that's one of the reasons why it hasn't really corrected. But what's really important and doesn't get talked about is October creates lows that are great buying opportunities. So I think we can have a little bit of volatility between now and October. We're looking for somewhere between a 5 and 10% pullback in the S&P 500. And we remain buyers. In fact, we even have a target going into early next year of 7,200. You know, earnings are just so powerful. They're so powerful in communication services and technology. Obviously, the story of AI remains very strong. We think that's going to continue to power markets higher. So
let me ask you, are you putting money aside to buy in October, or are you trimming from what you have?
So I'm really not selling, right? If I'm an investor, I really didn't want to take any profits. But I've been talking to a lot of our clients, and a lot of our clients still have cash on the sidelines. In fact, if you look at ICI money market funds here in the United States, we have over $7 trillion sitting in cash. I call that the money mountain. So a lot of dry powder that can still come into this market. And we're starting to see confidence come back as IPOs are coming back. And if you look at the Renaissance IPO ETF, that's actually broken out of a 3-year trading range. And that gives me confidence that the market can also continue to go higher.
Can you expand a little bit more on what you see as leading right now?
Well, it's tech, and I call it tech related, right? So it's the tech sector, it's communication services, where you have Google, you have Meta, you have Netflix, and even parts of discretionary, because you have Tesla in there and you have Amazon. So I call that tech and tech related. The true leaders, though, are semiconductors. So I really think that the semiconductor part of the market is the true leadership, and then with tech and tech related around it. And I don't see those trends reversing. There's no other setup in the market to really take over. I think it stays mega cap. We have seen small caps hit new highs, but again, I don't see them taking over leadership. They just don't have the power of the earnings of the tech companies.
Okay, so you said you saw some movement in smaller caps. Do you think that will continue even if they don't take over?
Yeah, I still think we're getting a broadening out in the market. So the breadth of the market is broadening. That's another bullish sign for the markets. So I do think that that's a long-term positive, but I really don't see them leading the market higher. And okay. I still think this is a mega cap cycle.
Let's talk about some of your stock picks, which do fall under mega cap, at least the first one does, which is Alphabet, parent company of Google. Now that they're past a court case in the U.S., they're getting a boost. Do you see that run continuing?
Yeah, that court case was a huge overhang. They still have another court case they have to get through, and I think they will get through it. Google is a major player in the tech space, and many people overlook other divisions like YouTube or the driverless car Waymo. So there's a lot to Google other than search. I think search has just been too much of a focus on the company, and that's been part of the overhang. And I think now through the court case, and I think Waymo here is hitting more and more cities, I think you're going to get a lot more attention on Google.
Okay, let's talk about silver. Why do you like silver as opposed to perhaps copper, for example?
So I like all the metals. But gold has had a great run. Our target has been 4,000 for some time, so there's still more upside. Silver recently broke out of a significant technical range. A lot of people here have called it the poor man's gold. I think we're going to go up and test the highs, and I think over time we have the ability to make new highs. So those that have didn't get into the gold trade, I think silver is the next story. Again, it's slightly different. It's more of an industrial metal. And, copper has been a metal that we've liked. One of the companies we have liked is Southern Copper. And unfortunately, with the mudslide in Indonesia, it's giving some other metal companies a boost. But I think metal companies and metals are in a bull market and will stay in a bull market.
And you stand by that for gold as well? You like Vaneck Junior Gold?
Yeah, so where the beta is in the gold mining juniors. So the gold mining stocks have really lagged and only recently broke out, and you get a little bit more beta in the juniors. So I do like the Vaneck gold juniors ETF, which is GDXJ.
Got it. All right. I do have to leave the conversation there, but appreciate your time, Ann Bartels, Chief Investment Strategist, Sanctuary Wealth. Thanks for that.